Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
In the world of finance, one thing's for sure. Investors are always on the lookout for signs that inflation and interest rates might be about to change. And when those reports come in, watch out. The S&P 500 is a benchmark index of the U.S. stock market, and it's been seeing some ups and downs lately. So what happened this week? Well, according to the latest government report, inflation is still running higher than expected, but not as high as everyone thought it would be. The Personal Consumption Expenditures Price Index, excluding food and energy, actually climbed by just 0.2% in August. That's a pretty modest number, especially when you compare it to the more widely followed Consumer Price Index. Now, some experts are saying that this report is a relief because nobody expected inflation to be as low as it was. But others are cautioning that we're still a long way from where we need to be in terms of controlling inflation. The Federal Reserve's preferred inflation measure held steady at 2.9% on an annual basis, which is still well above the Fed's target rate. The question now is, what will this report mean for interest rates? Some economists think that the Fed might actually cut rates again later this year, and the market seems to be pricing in that possibility. After all, markets are already expecting another rate cut at the end of October. But why does it matter? Well, when inflation gets too high, it can erode people's purchasing power and make it harder for businesses to invest in new projects. And if interest rates get too low, it can lead to inflation, or even worse, a housing bubble. So, the Fed has to find that delicate balance between keeping prices under control and not stifling economic growth. Now, let's take a look at some individual stocks that are reacting to this news. Pharmaceutical giants Eli Lilly and Co. and Merck and Co. are both up after President Trump proposed a new tariff on branded and patented drug imports, but with carve-outs for companies that have significant U.S. manufacturing operations. That's good news for these firms, because it means they might be able to avoid earnings pressure. So what does all of this mean for investors? Well, the fact is that inflation and interest rates are still a major concern, and markets are going to keep reacting to those reports until we get some clearer guidance from the Fed. But for now, at least, there's reason to be optimistic. After all, if inflation keeps running low, it could be good news for businesses and investors alike. As I always say on Quora, the market is like a big puzzle, and sometimes you need a little bit of help finding the pieces. Well, this week's inflation report might have been just that kind of clue. And now we get to see how markets respond, all before the next major policy milestone, the late October FOMC meeting. On Quora, I'm always on the lookout for insights and analysis that can help you make better decisions about your investments. So, if you're looking for more information like this, be sure to check out my channel. And as always, thanks for watching.